Hello, I'm Tim Beggins, president of Elk Trading Company, and this is the top news for natural gas. Number one, the 8 to 14-day temperature outlook is cool for parts of the Midwest and South. Number two, the September natural gas contract expires Wednesday. Number three, the meteorological summer ends this Sunday, August 31st. And number four, a bullish storage report, but a bearish reaction. Not good news. Let's turn to the September natural gas contract. Currently, natural gas prices are down, currently trading at 268.30, down 1.5 cents or 0.58%. As you can see here from the chart, we've continued to move lower, and we've been doing so since all the way back on June 23rd, contained here by the 13-day and 48-day exponential moving averages. And as you can see, ever since July 21st, we haven't gotten above the 13-day exponential moving average. So that's our first critical level of resistance. And of course, the September natural gas contract expires on Wednesday. So now all eyes will be turning toward winter. Let's take a look at the hourly chart. And as you can see, the RSI was oversold on the gap lower last night and now is currently trying to bounce a little bit higher and get back toward unchanged. Our first pivot here is 273.5. As you can see above that at 278.20. We do have some options around the 275 strike for option expiration tomorrow. So right now we've got support below the market at 260.5, 2605, and well below that at 252.2. So let's turn to the continuation chart. And as you can see, we've been sliding. And we continue to slide through our various support levels. We went through the 382 retracement, the 50%, the 618. Well, that leaves the 786 retracement on the continuation chart, which comes in at 224.40. What's going on? Well, we're below the break-even cost for natural gas production in places like the Haynesville, and that's for legacy assets, somewhere between 2.25 down to 275. With labor and material inflation, that number has been pushed up closer to 250 to 275 or even higher. And as you can see, we're below that. So right now, we're going to have to watch that rig count and see if we get a reaction on natural gas rigs this Friday. Let's turn to the Jan versus the October spread. And last week, we did hit our support level right at 120, 1202, and that held. And now we're currently trying to chop a little higher again, trying to head back toward 133.90. That's our resistance level. We've been unable to sustain 2 days over that level. So let's see if that is possible. But again, below the market, 120 support. And let's look at that EIA natural gas storage report. Came in at 13 against expectations somewhere between 22 and 26 BCF. But Friday's reaction was poor, and prices have been on the defensive ever since. And here's why. The 8 to 14-day temperature outlook is below normal for the Midwest and parts of the Southeast. This is not good. This is valid for the first week of September. So we've got a problem, folks. We've got much cooler temperatures coming in, and summer is over. And let's turn to look at the temperature anomalies. As you can see, that great big blob of blue and purple is showing that much below normal temperatures. The purple being 4 degrees below normal. In places like Chicago, all the way down to Atlanta, will be anywhere from 5 to 14 degrees below normal. And as we look further out into the remainder of September, we're getting a little bit warmer temperatures, mainly focused on the central part of the United States and the West. Let's take a look at the tropics. Well, we've got Ferdinand, and it is heading out to sea. As you can see right now, maximum sustained winds around 45 knots or 50 miles per hour, and it has a pressure of 1,007 millibars, but it is heading out to sea. The second system, which was a better chance last night, is now down to 0% chance of cyclone formation in the next 7 days. It has broken up. And here's our tropical hazards outlook for the week of August 27th through the 2nd. As you can see, mainly across the coast of Africa and as we move further out toward the mid-Atlantic. But right now, things are broken up. As you can see, that storm system that went through the Windward Islands just fell apart. Ferdinand continues to push out to the northeast, And really, there's nothing coming off the coast of Africa right now. And even if it did, take a look. We've got our Saharan air layer again, more dust. This time it's heading towards Central America, but we've got another large plume heading off the coast of Africa. This is going to inhibit any storm development in the mid-Atlantic region. And here's our drought. Well, it continues to be very dry in the west, all the way from San Antonio, Texas, back to El Paso, and then parts of the desert southwest, including Colorado, Utah, and of course, Wyoming. Let's take a look at our stocks for the week. These are the oil and gas E&P sector, market cap between $2 and $10 billion, and have a high short float over 10%. And because crude oil prices are up, the crude oil weighted stocks like Apache, APA, have been up almost 7%, but the ones that are just natural gas focused, such as Comstock, are only up 1.3% for the week. So again, recapping right now, the September contract, which does expire on Wednesday, is currently trading at 267.70, down 2.1 cents or 0.78%. Let us know your thoughts in the comment section below. Please hit that like and subscribe button. Thanks for listening. We'll see you soon.